Hi, thanks so much for tuning in to this earnings conversation on BQ Prime. We're speaking with the management of RITES. We've got Rahul Mithal, who is the chairman and managing director of the company, joining in. Thank you so much, Rahul, for taking the time. I do want to ask at the start, at the onset, you've seen a bit of a dip in total revenues, but at the same time, you've maintained the PAT sequentially at least. And in fact, if I'm not mistaken, you've seen an expansion of margins as well. How have you managed to do this? And I understand that this is on account of a dip in export revenue.
Yeah, good afternoon. You see, that is a very strong strength of RITES. We have four broad streams of revenue. One is export of rolling stock. We are primarily a consultancy company across sectors of infrastructure, so that contributes about 50% of our revenue. And then we have the turnkey business, which is about 25%. And then about 5-6% is the leasing business, the operation and maintenance and leasing of locomotives and rolling stock. Now, the export sector, as you correctly said, saw a dip in the revenue because the order book is a balanced order book of the orders which we got pre-COVID, Sri Lanka and Mozambique. So these were the compliance of these orders were finishing. But still, in spite of that, and that is where we score, we could push the other three verticals. And then if you see year on year, my consultancy vertical saw a 16% jump. The turnkey vertical saw a 115% jump, more than double. The leasing segment saw a 10% jump. And this balance between the various streams of revenue, between a high margin, mid margin, and a low margin stream of revenue, gives us the capability that we are able to come out trumps. And if you see 9 month to 9 month also, there is a steady growth. There's a 9% growth on PAT, there's 7% growth on the EBITDA. We have maintained PAT margins about 21%, core EBITDA margins around 28. And that's what takes us, gives us this strength. And that's our USP.
Okay. But I look at the order wins in the quarter gone by, in the Q3, you've won orders worth 1,200 crore rupees, and that's quite significant. Could you give us a breakdown as to where these orders, as in which stream these orders have come in?
Yes, in fact, Q3 we got 65 plus orders, totaling to about 1,200 crores. And from 30th 9 to 31/12 itself, there was 10% growth. And primarily, as I said, we are a consultancy company. We have 9 different verticals doing consultancy across all the various possible sectors of infra, whether it is airports, ports, rail infra, highways, buildings, city planning, all the possible areas of infra. So these orders, 65 orders for Q3 itself, they are primarily consultancy orders, except about 3 large turnkey orders. Even in turnkey, they are across different spectra. So you see, there's a IIT Delhi building order, about 600 crores. There's a station, Ayodhya station enhancement of order, about 100 crores. There's a Bangalore metro depot order for about 250 crores. So even in the turnkey mode, which we limit to about 25% of my revenue stream, because primarily, as I said, we are a consultancy company, but the mix of orders is across sectors. Even the consultancy orders of 60 plus consultancy orders are across sectors. So there's highway, there are the building consultancy orders, there are rail infra consultancy orders, there are, city mobility planning orders.
Mr. Mittal, when it comes to order visibility, you mentioned in your presentation as well that there is optimism considering the government's thrust on infrastructure. With that in mind, I think your investors will also be keen to understand what the visibility is for the company. If you talk about both order visibility and revenue growth and profitability, of course, not just in the fourth quarter, but in the upcoming financial year. So what is the trajectory that we can expect?
See, these are very exciting times for us, considering that 10 lakh crore plus of capex budget across all sectors of infra which we have a presence and have a presence for so many years, 48 plus years across all these sectors of infra. Whether it is the highway 2.7 lakh crores, railways 2.4 lakh crores, it is the urban infra, which is a 1.1 lakh crore, which includes metros. We have a lot of presence in metros. We are doing both domestic and international metro orders. So going forward, in fact, as I said, in 9 month to 9 month itself, last year 9 month we got 1,600 crores of orders. This year 9 months we got 2,400 crores of orders. So moving forward, not only in Q4 but in the coming FY, we will be able to leverage all these sectors to continue getting these orders. As far as the guidance for the profitability and revenue is concerned, we have been always focusing on a steady growth in our profits, our EBITDA, and securing margins at an appreciable levels. We are not really a construction company. Our revenue and entire strategy of taking orders stems from our core vision, our core strategy of a healthy growth in the EBITDA and the profit. And that is what we have been maintaining. As I said, 9 month to 9 month, you saw a 9% growth in the PAT. Even sequentially, if you see, quarter on quarter, there's an 8% growth in the core EBITDA. So moving forward, I'm sure that we'll be able to maintain this trend.
Would you be confident enough to say that you will see double-digit growth next year?
Our vision and our aim would be that it's a healthy growth. I mean, we've seen an 8-9% growth. We would be pitching for going as, I would not like to speculate a number, but seeing the trend, that would be our aim and our target.
On the margin front, any pressures that you're seeing on the turnkey projects that you're working on? Or do you think that the margin level of close to 27%, if I'm not mistaken, no, 20+% that you've done is maintainable in the fourth quarter and beyond?
You see, the turnkey sector by itself is a low margin business. It varies from about 2 to 3%. But what we did was that we have focused, since export revenue segment was taking a dip, we focused on better execution, faster execution, and also effective deployment of the personnel there. So if you see now, which is a good blip and a good jump, the turnkey margins, 9 month last year, they were about 1.3%. 9 month this year, they have gone up to 4.2%. So that itself, and Q3, we have seen 5% plus of turnkey margin. While that's going to be tough, it's a challenge, but our aim is to maximize the turnkey margins above the 3% normal average to be able to have a healthy impact on our overall company margins, which we always aim for at least 20% plus in terms of margin.
The final view on exports, that was a bit of a weak point in the quarter gone by. But do you see that picking up in the remainder of the year, or do you think that that's going to be a soft spot even as we head into the new financial year?
You see, the balance order book as of 1st January is 100 crores in the export. And these are the balance, as I said, of the orders which we had pre-COVID. And last 1 year, we have started bidding aggressively, reached out to a number of countries, Southeast Asian and African countries. Their delegations have come. You see, these countries are also recovering the changed economic scenario post-COVID, trying to get their fundings in place. So we are at quite an advanced stage in a number of countries in taking these orders to finality. This has been an unfortunate blip for 2-3 years, but I'm sure that moving forward, we will be able to secure some orders. Some small start has been made. We recently got a small order, but it is an order about 2 locomotives, about 10 crores for Bangladesh export. But it shows that the start is there. This sector has started opening up again, and I'm sure we're going to get some orders in the coming months, and in the coming quarters, it will start maturing into it.
All right, always a pleasure listening to you, and indeed this time speaking to you as well. Thank you so much for taking the time.
Thank you so much.